Something big just shifted in the world of small business funding, and almost none of it showed up in the headlines this week. If you run a small business, own a side hustle, or you have been thinking about starting one, what happened in Washington in the last 7 days directly affects your loans, your tax credits, your grant eligibility, and a brand new program that could put real money back in your pocket. Stay with us, because this information moves fast, and most business owners only find out about it after the deadline has already passed. Let's start with the number that has the small business community buzzing right now, 4.2%. That is the projected increase in the maximum SBA loan guarantee for the coming fiscal year, according to the latest figures released by the Small Business Administration this week. To put that in plain terms, if you have been trying to qualify for a backed loan and kept hitting the ceiling, that ceiling is about to get higher. For the average applicant, we are talking roughly an additional $11,000 in borrowing power. Over a 5-year loan term, that can translate to equipment, inventory, or hiring your first full-time employee. For a 2-owner partnership, run that math twice. Now here is the part they are not telling you clearly enough. That number is not locked in yet. The final figure gets confirmed after the Office of Management and Budget completes its review in September. The window between now and then is exactly the period where your application history matters most. Lenders are already adjusting their internal scoring models in anticipation. Which means the businesses that get their paperwork clean right now are going to be positioned at the front of the line when approvals open up. The ones who wait will be scrambling in October. And there is something else sitting on the Senate floor right now called the Small Business Opportunity Expansion Act. It proposes automatic annual loan limit adjustments tied directly to inflation, so you would never again be stuck with a cap that was set 10 years ago. It has not passed yet, but it has bipartisan co-sponsors, and the committee vote is expected before the end of the summer recess. We will keep watching it closely. Now let's talk about something that surprised even seasoned business owners this week, and honestly, it should make you a little fired up. A new automated pre-screening system was quietly rolled out by 3 major regional SBA processing centers, and early reports show it has been flagging and delaying applications from sole proprietors at a rate nearly double what human reviewers produced last year. 6 states, Texas, Florida, Ohio, Georgia, North Carolina, and Arizona, are seeing the highest volume of these holds. If you are in one of those states and you submitted an application in the last 60 days and heard nothing, this may be exactly why. Here is the empowering part. Under the Small Business Act, every applicant has the right to a manual review request within 15 business days of a status hold. You call the SBA district office directly, not the main 800 number, your district office, ask for a loan officer by name, and cite Section 7A review rights. That one phone call has already gotten applications unstuck for hundreds of business owners in the last 3 weeks alone. You have options. Use them. But there is a bigger conversation happening right now that affects every business owner who does not have a corporate legal team behind them, and it comes down to this: if you operate as a sole proprietor or single-member LLC, you are currently playing by a completely different set of rules than incorporated businesses when it comes to tax credit stacking. There is a bill, the Main Street Tax Fairness Act, that would close that gap, allowing pass-through entities to combine research credits and energy efficiency credits in the same fiscal year. Right now, you can only apply one. That disparity costs the average qualifying small business owner over $6,000 a year in credits they earned but cannot claim simultaneously. The legislation has cleared the House Ways and Means Committee. It is heading to a full floor vote, and its trajectory looks genuinely promising. And now for the development that has the entrepreneurship community the most energized and also the most divided this week. The Department of Commerce announced a new micro-grant program called the Local Business Vitality Initiative, targeting businesses with under 10 full-time employees in designated economic opportunity zones. Grants range from $5,000 to $25,000, no repayment required. Applications open in 30 days. Here is where the debate gets interesting. A proposed eligibility clause would restrict grants to businesses that have been operating for at least 3 years, which would exclude tens of thousands of newer businesses, including many that launched during or after the pandemic and are still building their foundation. Advocacy groups are pushing back hard, arguing the 3-year rule defeats the purpose entirely. The public comment period closes August 15th, which means your voice on this actually counts right now. The final rule has not been written yet. There is a lot happening, and it is all moving quickly. New loan limits, automated review delays, a tax credit fairness bill, and a grant program with a deadline you can still influence. The business owners who pay attention this month are going to have a significant advantage over the ones who catch up in the fall. If this kind of weekly briefing is useful to you, make sure you are subscribed and have notifications turned on. This information does not wait, and neither should you.